Hey guys, I wanted to show you a little bit of a little trade that you can run here. It's called a gap fill. It's a gap fill trade. That's what it's called, universally known as a gap fill trade. And basically, what we look for here is a gap down or a large gap in price action that you can see right here that normally gets filled. We know that about 70 or 80% of the time that if there is a gap, that gap will be filled. Well, today it's Sunday evening here in Kansas City, and this is the open of the market for the week. And I'm looking at Aussie dollar, and you can see that the market had rallied over the last day or so in the Aussie dollar, and then we got this large gap lower. One of the things that I identified here is that although we gapped lower, we still stayed within the support level that was identified on this first. What we have here is a double bottom that you'll see here, this double bottom, and the first leg there, market holding that support level. And there's a high likelihood here that this gap is going to get filled. Now, we may roll over and go further south, but the likelihood here is that the market will end up filling this gap. And so what I've done is, if I go ahead and turn on my deal here, is that I've taken this long position here. Now, my stops are very tight. They're just below this spike low. It looks like they're right on the spike low. They're actually just below that spike low, and we're up about 10 pips. And I've, of course, got my profit target just south of that gap fill to make sure that if the market does get back up there, that I'm gonna get filled. But I've got about 80 pips of potential profit in here for about 30 pips of risk. So it's a very, very, low risk, nice risk reward profile on this trade. I know if we get underneath this support level, that spike low, that hey, likelihood is that this is going to be one of those rare times that the market does not fill the gap. And now all we do is just kind of sit here and wait to see whether or not we can get back up here. Now I'm going to go ahead and just let this run. I'm actually going to pause the recording. But we'll come back to this and just see whether or not this trade plays out, just see how it played out, and whether or not we were able to fill that gap. All right, guys, thought I'd go ahead and just give you a little update here. We're a few hours later into the trading day here, and you can see the market has rallied. We're a little over halfway to our target, and things are moving just as we anticipated that they would. The market rallying here and now putting in a higher high here in the early parts of the 8 o'clock candle, actually the 2000 candle for me here in Kansas City. And 89.29 is our target. We're now we're just about 20 pips or so, 22 pips away from that. And so if we get up there, I'll go ahead and, well, I'm assuming that we will, but when we get up there, I'll go ahead and put out the video showing the close and that we actually did hit the target. But, it's still a chance here that we could fall over, but very, very nice rally here so far. Not bad at all. And traders, I just woke up. I actually went to bed because it got late. I put this on, if you guys will remember, the market opens in the evening here in Kansas City in the U.S. And at about 11:30, or 11 o'clock, I ended up going to bed. And you can see in the middle of the night in the Asia session, or in the London session, we actually popped up and hit that target. And there was 60 pips of profit in here. I was mistaken when I said 80, I think, in the first little clip. Actually, about 60 pips of profit in here. But this is a perfect little gap-filled trade that happened just as we anticipated. And like I said, this is about 70 or 80% of the time we see the gap get filled. So if you're in a position, where you can take advantage of something like this, these are very high probability trades. I can show you again, even if I bring down a different currency pair, USD Canada, and the gap that existed there, you can see a very small gap, and yes, that gap did get filled. And so this is a great little trade. There's nothing magical about it. There's no special, I guess, formula to trading the gap fill. It's just simply buying with an expectation that the market will fill that gap. The only time that you run into problems, of course, is if the market continues to drive lower before it rallies to fill that gap in the opening hours. And that's why it's important. Like I said here, we had that major support and resistance that came in here on that double bottom. That was not breached. That gave us a really good marker for where the stops needed to go and had a reasonable risk reward on this particular trade. So really nice trade. Just gives you an idea on how to trade the gap fill.